modern and innovative types of financial products, which were being, sold, produced and sold and distributed across the world. And we know what happened after that. When the mortgage housing sector collapsed in the US, it spilled across the world. In August 2007, when PNB Paribas closed down 2 of its biggest funds, which were based on securities, that was the beginning of the end at that point in time. A year later, the US government decided that it was not going to bail out Lehman Brothers, and that was it. A few months later, Northern Rock in England fell. So the domino effect really started playing out, and that's when the global financial sector and the economy was nearly brought down to its knees, with millions and millions of people losing houses, jobs, and so on. I think you know all about it anyway. So it was basically the securitization, the shadow banking system, which brought to light risk. But then after, something happened. Technology was moving forward. And of course, technology waits for no one, right? And the banking sector started to change. And this is when we started having new form of intermediation payment system. Mobile banking, peer-to-peer finance, cutting down the intermediary, finance, fintech, blockchain, and virtual currencies. We've heard a lot about it. Now, the importance of this is, again, because we are in a period where we need to find new economic growth strategies in the field of finance. And this is what happened. Because the bank, or the banking sector and the financial sector started being regulated strongly, there were technology-enabled new form of credit intermediation, payment system, on the basis of those products. And since then, I think we know what has happened. You can now use your smartphone to do almost, I heard Loretta speaking during lunch today, and how many wallets she has, and and what can we do with smartphone today. But the risk element is important to understand. And that's why it is important for countries to, while developing economic and financial strategies for development, also take into consideration the risk factor. The second thing that happened, of course, was regulatory changes. And since then, the global community, regulatory community, started working hard on stronger supervisory system with strict capital requirements and risk management. That was on the supervision and prudential aspect. But we also have, or had, the evolution of the anti-money laundering and combating terrorism finance. And this is the second part of the presentation. So what is AML-CFT? It basically relates to financial crime using technology or whatever. The point being that, can it reach a stage, irrespective of the means that is being used, technology or what, that it can lead to financial instability? And this is where AML-CFT started picking up as an area of regulatory compliance that countries were being asked, not to say compelled, to pay more attention to. Very briefly, what happened to the AML-CFT history? Anti-money laundering started, this issue really started in 1990, when the FATF was created in 1989 to give more impetus to the United Nations Convention, the Vienna Convention of 1988, which at that time regulated money laundering, predicated on drug trafficking only. That was in 1990. Then in 1996, The global community decided that drug trafficking was not the only offenses on which money laundering was taking place, and it expanded the list of predicate offenses beyond drugs and drug trafficking and drug-related offenses. Third, in 2001, everybody knows what happened. In New York City, the Twin Tower collapsed. And this brought, in November 2001, the global community together in Washington, D.C., to really start thinking seriously about terrorism finance. That's when we had the FATF developed under the aegis of the G7 at that time, because the G20 had not yet shaped up, to come up with the 9 special recommendations on terrorism finance. So we had then the combination of 40 anti-money laundering and 9 special recommendations on terrorism finance. In 2003, what happened? The global regulatory community realized that, banks had been misused, but with the regulation of the banking sector, criminals were sifting their line of activities and their monetary gains into non-banking financial services and non-financial sector. That's when the FATF adopted what is known as the DNFBP. Mr. Olivier is going to be talking a little bit more about this, which is really a different sector, designated non-financial businesses and professions. This is where lawyers, precious metal dealers in precious metal, jewelers, and all those kind of activities, real estate, were captured under the AML-CFT regulation. But what happened recently, after the crisis? 2 things happened. First, risk-based emerged stronger as a solution, in between inverted commas, as a strategy to try and find how to address those issues. But more importantly, there are some issues that relate to compliance and which fell squarely within the financial services sector, which came up on the regulatory radar. And they are very important because it touch each and every country, and countries like Mauritius. First, the real importance and relevance of beneficial ownership. Transparency. I think everybody knows now that transparency, if we have followed the ICIJ, the International Consortium of International Journalists, everybody knows about the Panama Papers, the Paradise. This is an issue that relates to transparency. Legal entity identifier, tax evasion. What is a legal entity identifier? In the aftermath of the financial crisis, the G20 came up with a decision to develop a unit, an identifier. What for? A global identifier in the financial sector to try and locate any transaction, financial transaction that takes place across the world. It's an intelligent code which is provided to each and every financial institution. The point about the legal entity identifier is that it was a means to try and understand where risks are located across the world. And even Mauritius is part of the legal entity identifier regulatory oversight committee. And I think, if I'm not mistaken, it's managed by the Stock Exchange Commission, right? The point about the legal entity identifier is that we need to understand the structure of a company, from being, for example, bank holding company, who is a parent, who is a child, who is a grandchild, when does the grandchild become a parent, when does the child become a parent, in order to understand the whole issue about ultimate beneficial owner. These are issues that are very important for what is going to come later, the FATF new mutual evaluation process. Tax evasion. It took 23 years for the global community. Mr. Arnold might add something on that. It took 20 years to make tax evasion a predicate offense for money laundering. So now that it is already captured in the regulation, we need to find ways and means of how to address the issue. Next, what has changed according to in the AML-CFT strategy? We need to understand the FATF mutual evaluation process. And this is very important and directly related to us in Mauritius. And by us, I mean the banking sector, the financial sector, the DNFBP sector, lawyers, casinos, all these sectors are now being evaluated for their level of compliance with the international AML-CFT standards. And we just went through this. Right. Well, there are challenges because it's a new process, but we need to understand it. And the point here, as part of this conference, is to try and start the awareness and sensitization campaign about what is it that we need to do and what is our role in the whole AML-CFT regulatory compliance sphere. What happened in the mutual evaluation process and methodology of FATF? This is very important to understand. Prior to in 2012, the FATF changed course on its strategy to evaluate countries. This work started just after the crisis in 2007. Prior to that, countries were being evaluated on what is known as a box ticking. Do you have this legislation? Yes. Do you have this institution? Yes. Do you have statistics? Yes. But then in 2012, this took a 360. The process was turned upside down on two bases. First, the main burden or responsibility now in the evaluation process lies on the country. How and for what reason? The country has to carry out its own national risk assessment process, survey. And the Prime Minister mentioned it yesterday that Mauritius has already embarked on this process. And Guillaume is going to be talking about it later. So this is the first thing. If you look at the recommendation for those who have studied it, in the pre-2012 FATF recommendation and methodology, there were very, very scarce references to risk assessment. In the 2012 recommendation, national risk assessment is #1 recommendation. And this doesn't happen out of the blue, because the FATF and the international community realizes now that national risk assessment is the pillar of the new AML-CFT evaluation process. You have to come and tell us, the FATF, sorry, not me, the FATF, what is your level of risk regarding drugs, regarding smuggling, regarding tax, anything. That is why countries are called upon to assume responsibility of conducting national risk assessment. And in this context, and I emphasize, this is not the ICAC's role or the role of the FIU or the role of the Ministry of Finance or the Ministry of Financial Services. It's the role of each and everyone involved in those sectors. Because at the end of the day, the FATF mutual evaluation process is not about sector. It's about country. When you go to the FATF, they are not concerned about how your sector is doing. Of course they are, but they are concerned about it in a bigger context. How is your country doing on that level? That is why it is important, and I emphasize again, that we need to be aware of what obligation is cast upon us. And recently, in the 2018 Finance Act, a series of amendments have been adopted to try and ensure that this message gets across, that people involved in the sector gets the message, that they have a responsibility and an obligation to participate in the process. Of course, there are going to be challenges. Nothing is perfect. But so long as we undertake, at our level, step by step to get engaged in the process, I think at the end of the day, we're going to be able to address most of the recommendations, if not all. I will conclude on one other important aspect of the FATF mutual evaluation. The FATF mutual evaluation used to be linear, one level. Recommendation, that's it. It's called technical compliance. In 2012, this changed drastically. There is now what is known as effectiveness of your system. How is your system effective? The country is measured on two fronts. The level of technical compliance. Have you adopted laws? Yes. Have you put up institutions? Yes. That's not enough. How is your institution working? Is it effective? This is very important. That's why we are working together on a committee, the National Coordinating Committee, and the chair of the Financial Secretary, who is myself, and everybody involved, to try and make sure that we are moving this issue forward in a manner that addresses the recommendations that have been made in the mutual evaluation report in order to ensure that the image of Mauritius as a good, strong financial services sector is really reinforced. And so this is a radical shift in burden and responsibility. Some of the challenges, I'm sure we'll have time to. The mutual evaluation, please, don't be scared. It's a new process. A lot of countries are going through that at the moment. Even the US failed on many of those criteria. And they were placed on an enhanced follow-up process at some point in time, because everybody is new to that. So some of the challenges that are facing us, I have listed them down. What is a risk-based approach? We're going to hear about that in a minute. What is a national risk assessment? Training, awareness campaign. We are embarking on that. We have already had 2 meetings with the relevant sectors regarding the NRA. De-risking, I'm not going to talk about that. I think you've heard a lot about it. Compliance costs, this is a big debate. I'm sure you know about it. I mean, we can talk about it outside. But these are new issues that have come up in that particular context. And at the end of the day, I think, we need to have this conversation. This is what we are putting in place now to try and develop a conversation with all sectors concerned. I am involved in that coordinating committee together with the Financial Secretary, Mr. Sigulam, and the FIU and others, and we are trying to develop a plan of action that makes sure that we capture, all these issues and at the same time address all the recommendations that have been made in the report. Unfortunately, it cannot talk about AML, let alone in 2 hours or 30 minutes, but in one day. It's a huge topic, and it keeps, getting into more specialized areas. I have not talked about the fintech aspect. Concluding remark is that the FATF is engaged, and they have had 10 forum and working sessions since last year on fintech and regtech, because they are concerned that this is an issue that needs to be addressed strongly, because it's coming up as an opportunity for economic and financial development. But at the same time, the FATF is concerned about risk, and they want to make sure that the risks are minimized and the level of, the opportunities that these platforms provide are not really being misused. So let's see if we have something else. That's it. Final word. I think I will emphasize again this issue of national interest. This AML issue is going, take my word for it, I've been working on this for quite some time. Those issues are going to keep coming up and up and up, and we need to be ready to address them. And I think we are in good shape because we have undertaken all the initiatives, and we're going to be doing more soon to try and address the recommendation and address all those issues. On that level and to that extent, I think we are already engaged in a process that within the next few months and year will show the benefits. But thank you again very much, and I'm sorry if I've taken more time. I'm the chair, I'm not supposed to be doing that. But we can take questions after. Thank you. Okay, I now have, I'm shifting my hat. I'm now going to be chairing this panel, and we have very distinguished interveners or panelists on this panel. And as I said earlier, my presentation has been very general. We are now going to move into some specific areas. And I'm going to invite now my colleague, Mr. Guillaume Olivry, who is going to be talking a little bit more. And please, keep in mind that we don't have much time, but he will provide, the necessary basics about what the National Risk Assessment is, and then we will take questions. He will also talk a little bit about DNF BPs.
Well, thank you very much, Navin. Can I be heard? Am I?
Can you hear?
Can you hear my?
We can't hear you.
No.
No.
Oh, or should I? Should I just go to the?
Oh, it's right here.
Oh?
Maybe we should switch to the mic.
Thank you. Well, thank you very much, Navin. And you already set up the scene for what the National Risk Assessment is. So what I would like to explain, because some of you here must have been in touch by, received some letters from the regulators or the ministry on national risk assessment. There is even something in the newspapers about the real estate sector they have to register. So what is the national risk assessment, and why are we doing it? If we look at the FATF recommendations and the change that has happened with the latest, the revised recommendations, countries are now being assessed on effectiveness in addition to technical compliance. So it's not just a question of having the laws in place and having the institutions. It's how we implement and how countries are able to tackle all these issues of AML-CFT. Bearing that in mind, the FATF was also aware, when coming up with the new recommendations, that no country in the world can tackle everything. So if you expect countries to arrest every single criminal, attack every single type of crime, it's never going to work. So what countries have to do now, in this context, is come up with a risk-based approach. In other words, measure the risk and come up with a hierarchy of risks in the country, and then take the limited resources that every country has and focus the resources on the particular risk. So how is that to be done? Recommendation 1 of the new recommendation states that countries must conduct a national risk assessment, and the institutions of the country must, through that assessment, demonstrate an understanding of the risks of the money laundering, terrorism financing. And now, by the way, it's not just ML and TF, there's also proliferation risk, which is another thing which should not be forgotten. And they demonstrate that understanding of risk. And how do we demonstrate it is by implementing and putting everything in place and effectively combating money laundering. So this is just a recommendation and what it says, but in practice, how does it work? What we have to do is use a methodology to assess risk. There's several methodologies that exist. There's the World Bank methodology that we're using. There's got the IMF methodology, or you can come up with your own methodology, but it must do two things. One is that it has to have a quantitative analysis of risk, so the quantitative analysis, and then you got the qualitative analysis, which is, if I give you an example, you'll understand exactly how it works. So we're going with the World Bank methodology, and we're going to analyze the risk. So what is the risk? How do we quantify risk? How do we measure it? Well, according to FATF, and I'm simplifying this because of time, but first you have to look at the threats that the country faces. Threats are drug trafficking, fraud, theft, all the different crimes. So that's your threat aspect. Then you have to look at your vulnerabilities. So for example, if you're dealing with drug trafficking, these are transactions which are mostly in cash, so the vulnerability would be cash-based businesses. And then when you mix the two, that's where you get your risk, and that's how you assess it. And the risk assessment really goes into a lot of detail. So for example, what you will do is that you'll look at all the data from your law enforcement agencies. You will look at the amounts involved. So you can have, for example, in Mauritius, we see a lot of larceny. So people being victims of simple theft. However, when you look at the amounts, it's quite small. So you see, this is how you actually do the analysis. And from that, you look at the money laundering side. And you try to see if the money laundering side reflects the threat side. And from all these different analyses, you come up with a final assessment. And the assessment serves essentially two purposes. One is to allocate resources effectively in order to maximize the impact that law enforcement has and the regulatory authorities have on money laundering. And the second is to also identify gaps in the system and make recommendations to policymakers if laws need to be changed, if more people need to be recruited. So this is essentially what the National Risk Assessment is about. So what have we been doing when it comes to risk assessment? We started essentially last year with the risk assessment. So the idea was to gather all the data, both from public sector agencies and from the private sector, and sort of merge all the data to start analyzing and come up with results, analyze all the laws, all the different regulations, and also the different public sector agencies, regulators, the staff, is everything adequate? So that has started. And some of the issues that we encountered was, first, the requesting of information from financial institutions, for example. That's one problem because most financial institutions are bound by confidentiality. The National Risk Assessment team didn't really exist in law, so what power do we have to request information? So that was the first issue. Second issue was just data collection, even from public sector agencies. I mean, the police will keep data for police purposes. FIU will keep statistics for the purpose of the FIU. Same with the ACAC, same with the Bank of Mauritius. Everybody keeps statistics for its own future use. So one of the things that we had to do was gathering all this data and making it work. That was not easy. We still haven't completed some of it, but one of the things that we decided to do was to simply change the law. Add a new section which would give us the power to request information, give us the power to actually gather all of this. And one of the things that we did also, because the National Risk Assessment is just a one-off thing. It happens in the next 3 years, 4 years, we'll have to do it again and update it. We are also coming up with regulations, you'll see that under the law, on how to keep data. How are institutions, public institutions and private institutions, supposed to keep data, which will accelerate the way updates are done in the future. So instead of taking months gathering data, we'll be able to do it in a few days because all the data will be here already. So this is where we're going with this. The timeline for the risk assessment, we're trying to complete it by the end of the year, or at least have a first draft of the report for the end of the year. And where does it fit in the overall AML-CFT system? What the National Risk Assessment will do is that it will enable financial institutions to understand the risk that is faced by the jurisdiction as a country. For example, if we're talking about drugs, we already have some information, but we can tell you through the risk assessment what are the services and products which are most at risk. So when you're dealing with these particular products, you should inform your MLROs and your compliance staff, be careful, this is a risk, these are the patterns. This is generally what needs to happen. The other topic, which is also important, which is another challenge that we'll be facing in the future and we're addressing already, you see, when you're dealing with mutual evaluation, people have a tendency to think that mutual evaluation deals with banking and the financial services sector. It doesn't. It deals with absolutely everything. It deals with the police, it deals with customs, it deals with NGOs, and one of the things that it deals with particularly is DNFBPs, so it's the designated non-financial businesses and professions. What are those? DNFBPs are essentially one of the ways money laundering can happen after you've squeezed the banking sector and the financial services sector. The whole AML-CFT is a bit like a game of whack-a-mole. So you hit the banking, financial services, insurance pops up. You hit insurance, something else pops up. Now it's all in, the main focus is on the NFBPs. What are those? So you got the lawyers, accountants, precious dealers in precious metals and precious stones. You have, well, according to FATF, DNFBPs would include management companies because TCSPs, trust and company service providers, would be DNFBPs. In Mauritius, we consider them financial institutions, a bit of a difference. But yeah, technically that would be there. You would have the real estate sector, that would be DNFBPs. And what needs to be done, and this is a major difficulty for most countries, is to effectively regulate these sectors and ensure that they submit suspicious transaction reports to the FIU and things of the sort. I can tell you that the level of FIU we're receiving from the NFBPs is quite low. So this is where the focus will have to be. And why is it important to start regulating the NFBPs? Well, if you take, for example, the jewelry sector, we've pretty much got the banking sector cornered. So if you want to transfer money abroad through the SWIFT system, it will leave some trace on the records. MVTS, so the money value transfer services like Western Union, MoneyGram, we've got the records. So one way to move value from one country to the other is very simple. You take the drug money, go to a jeweler, you buy some diamonds, put that in your suitcase, you take a plane, go to another country, sell it when you get to your destination, and you've moved the money. That's you move the value. And so you need to get that cornered. So this is essentially the main challenge that we'll be facing as a jurisdiction. Because banking sector, financial services sector, we've got the institutions, we've got everything already set up. Needs consolidating maybe in some areas, but it's easy to do. The NFBPs will be the main one. Yeah. Yes.
Okay. Thank you very much.
Well, we'll take some questions later on, I'm sure.
Yes. Thank you very much for a very nice introduction on this topic of national risk assessment and the NFBP. I now have the pleasure to invite Mr. Ravi Mohan, who is going to also speak about the risk-based approach related to AML-CFT. Thank you.
Okay, good afternoon. I hope you can hear, right? Yeah. Basically, I will take about 10 minutes or so to talk about the risk-based approaches to AML-CFT supervision. And as you know, risk-based supervision is a key word in the supervisory realm these days. So moving away from this backward-looking point in time, camels-based supervision, to a forward-looking risk-based supervision has become a main facet of the supervisory architecture in recent times, and especially after the global financial crisis. So if you conceptually look at risk-based supervision, you know that the supervisory resources, whether with the central bank or with the other agencies, are very scarce. So how do you allocate these scarce resources among those key institutions and key areas which are very critical is the most important part of a risk-based approach to supervision. And the same thing applies in the case of AML and CFT aspects as well. So basically, there are 3 or 4 important facets. One is to create a risk profile, very comprehensive risk profile, whether it is on the normal operating area of the institution or on AML, CFT related issues. Then from the risk profile, you develop a risk matrix, which enables you to evaluate many of these things, parameter-wise, giving some numbers, trying to concretize and give some quantitative measures to the risk associated with that. This includes both the inherent risk and the control gap related risk. Then you have some risk mitigating mechanism. You find out the net risk. You have a scoring pattern. You arrive at the overall score for the institution. And then you have the supervisory action which follows from that. So how do we factor in AML CFT risk into this? Where institutions have been very easily doing this for the major risk, like the credit market operational risk with not much difficulty. But in recent times, adopting a risk-based approach to supervision of anti-money laundering, combating financing of terrorism activities of banks and other institutions, it has evolved as an important tool in developing a complete picture of an institution's risk profile. And the revised FATF recommendations, they place increased emphasis on the use of risk-based approaches to implementation of the requirements of these standards. And if you look at these 40+9 recommendations, before the revision, the specific risk-based requirements were located in different places, something in CDD, something in internal control. But with the revision, this R1, it consolidates everything in a single place. So when we look at the domain within which the IMF has been operating here, many countries in Southern Africa, they are implementing the risk-based supervisory system, but there are a lot of policy challenges and strategic demands on the prudential supervisors to understand the risks that supervised entities are undertaking and enhance the risk management practices, especially those relating to money laundering and financing terrorism. So the financial sector supervisors are required to understand the ML-FT risk in financial sector broadly, and more specifically the risk inherent in activities of each institution, as well as measures adopted to mitigate these risks. And according to that, they can allocate the resources to those institutions and those typical areas of AML CFT in a more proactive way. So this aspect of inclusion of ML-FT risk in the RBS framework, it has a lot of challenges for the financial sector supervisors. They are reviewing their existing supervisory arrangements and adopt effective supervisory frameworks, tools, and practices. And one of the very important challenges associated with that is the skill development. So this is a slightly new area for a regulator, a supervisor. So he has to be conversant with many of these recommendations, the FATF requirements, the BCP 29 of the Basel Core Principle, which of course they are much more familiar, but the FATF recommendations and the new things like this fintech, they are creating a lot of implementation and operational challenges. So skill development is a very major factor that is evolving for the risk-based supervision. Now if you look at the risk assessment, which both my previous speakers have highlighted upon, the risk assessment is the foundation of an effective risk-based approach. So it sets out specific risks that exist and are the basis on which risk mitigation strategies and systems and tools are developed. So you can granularly look at it in different levels. The countries are required to identify, assess, and understand their national money laundering and terrorism financing risks, the national risk assessment. Then the supervisory authorities, they have to assess and understand the MLTF risk across the financial sectors and institutions they supervise. And at the third level, the financial institutions are required to identify, assess, and understand the risks implicit in their operations. So at the national level, you have the national risk assessment. For each supervisor, he has to look at the risk that the supervised entities are engaged in, and the institutions have to look at the risks that are associated in their operations. So you have to look at these three levels, and each of them is important. And if you look at as a building block, starting from the institution, it comes to the supervisor, and then it percolates in the national risk assessment practice. So we spoke about the national risk assessment in a detailed way, so I will not touch upon that. But the specific obligation for financial institutions, they have to have an updated and documented risk assessment in accordance with the nature and scale of business. So higher risks have to be dealt with and managed in a different way as compared to the lower risk. And two aspects are very important in a risk-based approach. One is the general process by which a supervisor, according to its understanding of risks, allocates resources to AML CFT supervision, and the specific process of supervising or monitoring the institutions from an AML CFT perspective. And basically, the supervisor should have a clear understanding of the risks present in the country, should have on-site and off-site access to all the relevant information on the specific risk associated with the financial institution, including the quality of compliance. The frequency of supervision should be based on the risks present in the country and the financial institution's individual risk profile. And basically, the process should encompass review of the financial institution's risk assessment, adequacy, implementation of policies, internal controls and procedures, and the degree of discretion allowed to the institution to manage it. The FATF recommendations means that the institutions should undertake the assessment to ensure they understand the risks arising from their customers, products, service, delivery channels, and geographic locations, and use policies and procedures and internal control to effectively manage and mitigate risks, and have enhanced measures for higher risk customers and activities, and continuously assess the risk and effectiveness of the controls. So these requirements will be addressed in the national AML CFT laws and the regulations that are formulated, and the guidelines that the individual regulators are giving to the regulated entities. So basically, in a risk-based approach, you will find that the FATF recommendations imply that the supervisors should understand the risk faced by the supervised entities, understand the risk management framework of these entities, develop a risk-based approach to supervision, and direct the supervisory efforts to entities identified as being high risk. In our experience in dealing with this region, the Regional Technical Assistance Center of the IMF, RTAC as we call, in AfriTAC South, which deals with the 13 countries in the region, we have been working in engaging with the governments, with the agencies, with the FIUs, and with the supervisors specifically to enhance the capacities of their supervisors, basically as part of the Sustainable Development Goals of the IMF. And in this context, our observations in working with many of these countries from a risk-based approach to AML CFT supervision is that we find in many cases, to have a proper, approach put in place, there has to be a lot of coordination and collaboration with the various agencies, and also information sharing. And this is something which is lacking in many, jurisdictions, between, I should not take the names, but generally between the supervisor and the FIU, and the FIU and the other entities, the information flow is not very smooth. So this creates a lot of problem in national risk assessment, in supervising the entities, in having a country perspective on, the AML CFT risk mitigation. The second thing is the quality of off-site surveillance. You should have a very strong off-site surveillance system from where you are able to generate a large number of MIS without too much of a problem. Your cash transaction reports, your STRs, they should automatically come from the system. If your banking system or your non-banking system does not have a very strong and resilient off-site surveillance mechanism and the data analytics associated with that, again, your whatever Naveen spoke in the initial part, it will not be very effective. The third thing is skills and capacity of the people who are managing this, who are in the banking system, non-banking system, and the supervisors. So this has to be enhanced on a continuous basis. We have been doing a lot of seminars and training programs and missions to various countries to do this. And correspondent banking arrangement has been lost in many jurisdictions. It's a big challenge in sub-Saharan Africa, not only in sub-Saharan Africa. In many parts of emerging and developing market economies, the withdrawal of the correspondent banking attributable to AML CFT shortfalls in these jurisdictions is a very big challenge for the implementation of the entire AML CFT program, and also from a risk-based perspective. The next one is the FSAP. Whenever we are doing a financial sector assessment program, from a banking sector perspective, we look at the BCP 29. All of you know that, about the integrity of the financial system. This has got a large number of essential criteria. So how these essential criteria are implemented by the various entities is a big challenge. In many jurisdictions, this BCP 29 is either largely compliant or materially non-compliant, but not fully compliant. So something is lacking somewhere. And finally, the AML CFT risks are not integrated in the risk metrics with the entire risk-based supervision approach. So the role of the way forward, as we see it, is to have a large number of diagnostic missions to many countries to identify what are the challenges, to have seminars and things like that in jurisdictions, especially in Mauritius. We had a few of them in the last couple of years, and then have technical assistance missions on two areas. One is by the legal department of the IMF. This looks after the drafting the laws and the regulations and things like that, relating to anti-money laundering in many countries. And second thing is more operational, having a risk-based approach to AML CFT supervision, which again we have done in many countries in sub-Saharan Africa. So we feel that with this complementary role by the fund and by the various governments and the regulatory agencies, we will be able to take AML CFT supervision to a much higher level, to much higher risk-based level as envisaged in this. And let me also leave with a parting thought. So far we have been talking about how to have this AML KYC requirements in many of these countries. If you look at the globe, there are many countries which are, as we call these EMDs, emerging market developing economies. They themselves, within that, there are large number of countries which are, low income, which are fragile economies. So in many of these jurisdictions, AML KYC is also used as a hindering, factor in financial outreach, in financial inclusion, financial literacy and all. This is also one point which we should be very, very focused. Basically, driving this AML KYC, we should always have the other view in mind, that this can drive away many customers from the banking system, small customers. Especially, in India, when we formulated the entire KYC guidelines, we had a specific clause for the small customer, a sort of a minimum amount of self-certification, and also that he will not be thrown out of the banking system. Because we used to feel at that point that otherwise KYC will mean kill your customer, So basically to have this type of thing, that's also a thought I will leave with you, that when we are looking at all these things, we should also look at the small customers' perspective as well. So we are not doing it, an overdrive. But then the other areas which are very critical on risk-based approaches to AML CFT measures, that will show the country in a very good framework, and we are quite happy that Mauritius is on a much higher footing in most of these areas, and I am sure that the new format and whatever help the fund is going to give will take it much forward in the realm of AML CFT. So thank you.
Thank you, Ravi. I think if you combine Guillaume's and Ravi's presentation, you get a very nice picture of risk-based approach and where the AML CFT national risk assessment fits into, and from a practical perspective as well. I now have the pleasure to invite Mr. Vikram Panchu, Deputy Governor of the Bank of Mauritius, who's going to be talking about customer identification and verification, the requirement for CDD in the financial sector, as well as the advent of the central or centralized KYC registry.
Thank you, Chair. A very good afternoon to you all. And I take this opportunity to thank the FSC for the invitation to this very interesting high-level conference. First of all, I would like to restrict my comments to the deposit-taking financial institutions, which the Bank of Mauritius regulates. Of course, what I'm going to say could also apply to the non-deposit-taking financial institutions under the FSC. As you are aware, the Bank of Mauritius follow best practices and adhere to international standards, namely to the BCBS core principles for effective banking supervision in matters of regulation and supervision of banks. Before I proceed to discuss CDD, that is customer due diligence, let me digress a little on the evolution of the banking landscape since 2009 to give you a sense of my perspective, where I'm coming from. I think there are three key factors that have been reshaping in fundamental ways how banks globally go about running their business. International banks having a presence in Mauritius are no exception, and to a lesser extent, the local banks are also affected by this. The first factor is the increasing importance of AML CFT ever since the US authorities have fined banks billions of US dollars for misconduct and breaches of anti-money laundering regulations. I think Ravi mentioned it. In our own part of the world, Sub-Saharan Africa and other developing countries, there are now greater concerns of losing correspondent banking facilities in USD and Euro if other bank customers happen to deal with, directly or indirectly, with sanctioned persons in the US OFAC list, the United Nations Security Council, and the EU list. Since 2009, banks have seen their financial crime compliance cost increase exponentially. Many banks have responded by de-risking, debanking high-risk customers. Now, if they don't know, they would avoid, and they would close banking accounts. The second, I think, key factor is the regulatory pressures. We have had implementation of Basel III, where banks are required to hold higher equity capital, which is costlier for them. The systemically important banks, we have 4 in Mauritius, are required to hold additional capital. And there are, of course, in Basel III, more rigorous liquidity risk management with the introduction of namely the liquidity coverage ratio and the net stable funding ratio, among others. These have challenged bank strategy and business models. The banks have responded by optimizing capital allocation, that is basically retrenching from non-viable business segments and repricing products and services. While previously income was primarily generated from the asset side of banks' balance sheet in the form of interest income, banks are now increasingly optimizing the liability side of their balance sheet and getting fee-based income from transaction banking. The third factor is more or less of a positive factor, which is the transformative technological changes. Investment in IT, more importantly, choosing the right technology, can significantly reduce cost for banks and make a huge difference in how efficiently banks conduct their business. The increasing compliance costs can be mitigated by automating front-end processes, using AI for data analytics, and significantly improve risk management by having integrated management information system. Let me now turn to the requirement for customer due diligence in the banking sector and also touch upon the central KYC registry. Before that, I would like to start with a clarification. In common parlance, we tend to use CDD interchangeably with KYC policies, which are the building blocks of an effective AML-CFT framework. But strictly defined, CDD is a subset of KYC, which is a much broader concept. So in customer due diligence, consists of 2 steps. First, you identify who your customer is And second, you verify. You have to prove who your customer is. So you need other sources of information. Whereas KYC is understanding the customer behavior, the business activity, who they transact with, what are the risks. For instance, does his name or her name appear in the sanction list? In July 2017, the Bank of Mauritius revised its guidance notes on anti-money laundering and combating the financing of terrorism, following the BCBS release in June 2017 of the guidelines on sound management of risk related to money laundering and financing of terrorism with regard to account opening. Except for the enforceability requirement, the guidelines are largely compliant. However, some fine-tuning is still required following the findings and recommendations of the ESAMLAG Mutual Evaluation Report. So what are the CDD requirements and recommendations from international standard-setting bodies? Banks should identify customers, including ultimate beneficiary owners, and verify their identity using reliable, independent source documents, data or information, such that the financial institution is satisfied that it knows who the customer and or beneficial owner is. Where the financial institution is unable to comply with the applicable CDD requirements, it should be required not to open the account, or commence business relations, or perform the transaction, or should be required to terminate the business relationship and should consider making a suspicious transaction report in relation to the customer. For high-risk customers, banks require updated CDD documentation at frequent intervals, and for low and medium risk customers at less frequent intervals. Ultimately, whether a bank decides to onboard a customer or not would depend on the risk appetite of the bank. The idea of a central KYC registry was first proposed by the FSC. Subsequently, the FSC and the Bank of Mauritius jointly agreed that the central KYC registry should preferably be hosted by the central bank, given that banks hold most of the KYC information. Currently, CDD documentation is paper-based, and each institution stores its own paper-based documentation, which the supervisor could ask for during on-site examination. Any person wishing to open accounts with 2 or more banks would have to submit to each individual institution the same CDD documentation, an inefficient, time-consuming process affecting the cost and ease of doing business. A central KYC registry is, in effect, a centralized repository of standardized information of customers in the financial sector, which member institutions would use to identify the customer without him or her having to produce CDD documents each and every time that he or she wants to have a new relationship with a financial entity. The BUM and the FSC have had several meetings and set up working groups to work on the amendments to be made to the legislation, on the harmonization of the standards as well as the technology requirements. As of date, the bank has already amended the banking laws to include a provision on the central KYC registry. Both institutions have agreed on the minimum standards, but only the technology is still being discussed. So the project the BUM and the BUM and the FSC are working on is at this stage more of a central CDD registry, although we refer to it as a central KYC registry. Conceptually, the central KYC registry has been modeled on the MCIB, where the member financial institution would provide the CDD information in electronic format. It will be then responsible for updating the information and will pull the information from the registry. But different technologies can provide different solutions. There is the conceptually more challenging customer push model, where the responsibility to update the information is on the customer, and he or she would decide which information to push to which financial institution. The central KYC registry can provide, for instance, a mobile application for the customer to update information, and the mobile application can be securely accessed through the use of modern technologies like biometrics, essentially fingerprints and iris. Now, can this central KYC be a blockchain-enabled system? I would leave it to our friends here to perhaps talk about that. Finally, I would conclude with two elements. That central CDD registry could eventually evolve into a central KYC registry by having further enhancements. One of these is to link up with the current initiatives taken by the Ministry of Technology, Communication and Innovation to make available public sector databases. It could make use of the biometrics for a higher authentication standard, and also to include sanctions and adverse news screening tools and other information databases for verification of sources of funds and sources of wealth. It may not be a public sector or regulatory arrangement. In South Africa, for instance, Thomson Reuters has joined hands with ABSA, Standard Bank, and First Rand Bank to develop the eKYC. So the potential cost efficiencies gained through centralization of onboarding processes would undoubtedly contribute to reduce financial institutions' compliance costs, improve customer service levels, and increase standardization of KYC quality and compliance across the industry. Thank you.
Thank you very much. That's interesting because we are now moving into a topic that Vikram has introduced, and which is going to be picked up by Joseph and Ben, who are expert in what I called earlier RegTech. In other words, trying to find technological solution for regulatory compliance. Yeah. Over to you.
Absolutely. As kind of the panels discussed before, we spend a lot of time looking at systems from a systems design perspective, and how can you look at existing systems or ways of doing certain transactions or certain things in an everyday life, and how can you use new systems designs or technologies to effectively make those things more efficient. And I think it's actually good to just kind of start with the history of networks specifically. And the internet is a really, really good place to start. At the end of the day, if throughout all the panelists here, you've heard a lot of conversations about data, about communication of information and transferring information efficiently, effectively to make sure that there are certain requirements being met. And this is effectively what the internet does very efficiently. The internet was really designed as a medium of information and transformation and communication, and it's enabled the world to do incredible things. The one big thing, and kind of coming to the same timeline of 2008, there's new systems that have now come into play which look like blockchain technologies, or the initial kind of thing, which is Bitcoin, really look to solve fundamental problems in that way of moving information over the internet. The internet was very good at moving information, but we had a very hard time understanding how do you trust the information, or more importantly, the parties that are sending that information over the internet. How do I know that the information that I'm sending you is in fact true and has not been changed or replicated by someone else or transferred or tampered with? Really, this idea of trust, the ability to ensure authenticity in the internet, is pretty much impossible up until the invention of the blockchain. And this is, the timeline was interesting, is that in 2008, 2009, as a response to the financial crisis, there was an attempt at something called Bitcoin that looked to try to not eliminate intermediaries, but to enable trust to be distributed across more participants. So the users involved in a financial system would now be a part of the process, as well as the different institutions in some cases and whatnot. This is all about how do you share information, but ensure that now I can attest to one thing being true unto itself. And this is a very, very, very important concept, because the enablement of trust in any type of a digital or network-based infrastructure effectively solves some of the most fundamental problems that we have in the world today. The ability to share KYC information or identity information prior to things like blockchains or distributed systems is pretty much impossible to do without being able to not guarantee that hacking might occur, or the ability to tamper with certain information, or to fake information, or to enable massive fraud over a system. These things are fundamental issues that are largely the reason why, when you look at the way that information from a compliance, KYC, or identity perspective is not publicly distributed around the world, these are generally the reasons why, is that we cannot ensure, verify, validate, or attest to the fact that my information is mine and it hasn't been changed as it's passing down a chain of institutions. And so this is the number one kind of thing. And so as to that kind of the last discussion on how you look at systems designs and ways to solve these things, when you can look at new ways of effectively sharing information across institutions, across individuals to institutions, different government bodies to financial services companies, and et cetera, what you start to see is the ability for all of us to all start to work together to enable and ensure that the trust in all the information that we are sharing is in fact true, and at the same time, we can transparently start to enable systems to enable identity information to be passed with more privacy than we've had before as well. And this is really the important part, is how do you enable privacy while creating transparency and more security and giving us a better quality of data or information around a compliance requirement in any country, like in Mauritius, or the ability for Mauritius's institutions to actually share information across themselves and to the other countries in which it does business with every day. And this is the really important thing, is that the networks are not only about just, in one place or within two companies or two parties, is how do you enable a global network, a distributed network around every different participant in the global economy to actually enable the same type of information sharing while gaining a much higher value of having all of our data working together, and yet ensuring that we have more security around the data that we hold today. And this is kind of the crux and the key part of what blockchains start to enable and solve in ways that we've never been able to see before. Ben, I'll kind of jump over to you to continue on with that.
Thank you.
Thanks, Joseph. Yeah, so you summed it up really well in terms of the information transparency that we get out of having these distributed systems that everybody can participate in. I think this idea of having a ledger that can be verified by independent parties, that isn't something that we have to go through long reconciliation processes, is something that is ideal not only for individuals, but even at the government level. I think that we're seeing changes right now globally, not just in countries like Mauritius, but in all major countries around the world as well. That we see new regulation passed down by the IMF. We want to make sure that that is meeting the standards within our own jurisdictions. Do we have a way to do that in an automated way? So many transactions are flowing through countries like Mauritius. There's probably 100+ countries in the world that do cross-border banking. There's huge amounts of investments that flow through countries like Mauritius into Africa. And you want to be able to make sure that at any given time you can say, we can reconcile this, we can do that in an automated way, and you don't have to just trust us on our reconciliation, but you can verify that independently. And this is an ideal, something that what we're seeing with what you can do with blockchain technology, we can begin to strive towards. And something that with artificial intelligence, we're also finding we can identify where there's cases that it doesn't always work. We're seeing right now globally that AI is being applied for AML just to detect where illicit outflows occurred that we didn't see before. We knew that there was corruption indexes that identified certain countries that were more difficult to track. Now we're seeing banks applying artificial intelligence and saying, oh, we're able to reduce some of our overall cost in terms of what we had to reconcile before manually. And it's quite a complicated process to reconcile. You could ask anybody here that's involved in that process. And it involves many different entities. And in fact, sometimes multiple governments have to collaborate just to put together the data to understand what a single flow of transactions actually meant. And we're seeing AI begin to play a part in reducing that cost. And we're seeing blockchains being stood up, and in some cases, I think Mauritius is even piloting a number of different blockchain applications today to understand what's happening not just within the country, but with the flows that go to many other countries, because this isn't isolated world, right? We're a global people. We want to be able to communicate globally. Blockchains are a way to enhance the trust of that communication. Joseph made a really good point about privacy, though. A lot of people think that blockchains must make everything visible and that you can just see all the data right there on this ledger. That's not exactly the way that they work. They do provide us the ability to verify whatever information is put on them, but we can also use things like applied cryptography. We can protect end-user data. We can attest to the data that is not on a blockchain and use the blockchain as a way to share that we have that information. It's offline. We can reproduce this. If you are an independent auditor, you can come look at our offline data and reproduce that same thing that we put publicly for everybody else to verify. And if we can't, then there is a discrepancy, and now we know that there's an issue. I think this is something that is subtle, but it's important. And when we see how this technology can best be applied, we can start to enhance the systems that everyone is using today. So hopefully that's helpful.
Thank you very much. I'm going to come back to you later. I now have the pleasure of inviting Mr. Rajesh Ramlal, who just joined us. And he'll be talking about CDD requirements for non-financial sector, lawyers and legal professionals, the changing face of regulatory compliance, and mutual legal assistance and other forms of international cooperation. Thank you.
Well, thank you, Navin, for this introduction. Ladies and gentlemen, well, at this point in time, and we're in the fourth session, well, I'm trying to be as brief as possible in the time which has been allocated to me. Now, I won't go down in that order. I think the best way to start is to look at the changing face of the regulatory compliance ecosystem. Well, I think there is no doubt about one thing, that we are living in a globalized world where technology is getting into every nook and corner of that globalized environment. Now, picking up from this sort of, well, virtual cartoon, which Navin described, about where the industry lies, where government lies, where, well, the fraudsters lie, and many a time you would find that governments or authorities are reacting to what has happened already, and well, and many a time it is too late. Now, I think one of the most important key issue in tackling that sort of multidisciplinary ecosystem is the coordination between different government agencies, stakeholders, and also coordination between different governments. Now, I cannot overemphasize that fact. Well, this session is about the new financial services landscape. Why do we say it is new? I mean, there's always things that happen, and they are happening faster and faster. I think the milestone this afternoon is the financial crisis of 2008. And from there on, what has happened, we have had a number of institutions trying to understand, what could be done to fix it when it goes wrong. And Navin has earlier in his presentation spoken about this securitization business, the bundling which was taking place, and this parallel banking system which was operating. but at the end of the day, it brought down the entire world economy. And those who would remember that in 2009, in Pittsburgh, a Minister of Finance and later Prime Minister of the United Kingdom, Gordon Brown, said, to fix a global problem, we need a global solution. And that governments had to come together to find that solution. And one of the things was to set up the G20. And the G20 gave a mandate to one of the important institutions these days, and that is the OECD. Now, in that new environment, exchange of information became important. Then we had the setting up of what we call peer reviews. One of the most important things in this new environment is being reviewed by your own peers. And what this means is that a country is reviewed by a number of countries in a group where that country has accepted to be a member. Now, this is something very, very important. Because if we fail to understand this, I mean, many people wouldn't understand, well, and many of time I've heard, but are we not a sovereign country? True, we are a sovereign country. Politically, yes. We have a vote at the United Nations, but today, sovereignty is no longer an absolute thing. Sovereignty is a circumscribed thing, and the moment you become part of a club, you've decided to surrender part of your sovereignty. And if you are a member of a number of now institutions, like, well, the inclusive framework of the OECD, or you join the Global Forum on Tax Information Exchange of the OECD, or you're a member of ISAMLAG, which itself is a member of ETF, well, you go down a route where you got to play by the rules which that club has set itself in connection with all its members. And this is also the globalized world in which we are living now. And that is very important, because the moment you fail to understand that sovereignty is now a circumscribed issue, and there are a number of things you would say why we should not be doing this or that or the other. What is now the consequence of that? More and more, we're looking at assessments by the peers, and you have ratings. And worse, you get listings. Well, those listings have been there for some time, but it's becoming common, and like you are in a league. Are you in a blacklist? Have you been listed somewhere? I mean, SEBI, which is the Securities Exchange Board of India, is also going down that route. Others say, no, that is not our road. But they're going down that route. And what that is important, it's about risk. It's about reputational risk. It's about moving capital. It's about where investors go, and what is then the ease of doing business or the cost of doing business. Where do you put your money in that country? So there are a number of things which I'd like to draw your attention to, one of which is this sovereignty issue. And how do you deal with that? I mean, countries have been trying not to be chasing tax evaders, fraudsters, or issues about terrorist financing. It's about, the signing of either multilateral treaties or bilateral treaties. Now, one of the other important things is the moment you sign a bilateral treaty in such areas, again, you're surrendering part of your sovereignty, right? So if you're signing a tax treaty, you're deciding to give away a certain part of your taxing right to that other country. That is a basic thing. What I also find is by having that sort of reviews by the peer, I mean, ISAMLAG is one, FATF, Global Forum of the OECD, the inclusive framework of the OECD, and soon probably the TAXUD, which is the European Commission division that looks after, what we call tax governance in countries. Now, in this process, what we're finding is the mere peer pressure is turning soft law into hard law. And what I mean is that the criteria that are being set by these international, supranational institutions, like, FATF, with, for example, LEIs, beneficial ownership identification issues, well, by the peer pressure of trying to have, the criteria satisfied, countries now are having to amend their laws domestically to comply with those international norms. Because these are norms, but then you've got to turn it into law. And there is no such thing as an international law of those norms. It's all domestic. And today, if we have had to amend through the Finance Act a number of legislations, the Financial Services Act, the FSMLA, or any other related financial law, it is to be compliant with that. Now, as Navin has pointed out, it is not just having sort of a tick-the-box approach that law is there in place. Where the shoe could pinch is what about the implementation side of what you say you have. And I can tell you, when you go to those peer reviews, well, you could have around a round table, 30-plus countries asking you about specific things based on a report which has been produced as a result of questionnaire that have been sent to you 6 months ahead of time, ahead of that meeting. So it is a lot of work, but then this is the sort of lane into which we are all into, including small countries or large countries. Even, as Navin has pointed out, the United States, for example, I mean, it does not got everything, up to scratch. So this issue of peer reviews and ratings and listing is something we will have to cope, to live with, and actually will have to keep us on our toes. And this is something for all the stakeholders, including the agencies, to understand that we need a coordination and not a sort of silos approach. Otherwise, it doesn't work. Because for these supranational institutions, what matters is the country, not the sector. But for the country to come out, there must be coordination between these institutions. And this is where things like MOUs become important. And at the end of the day, I also mentioned earlier, exchange of information between countries. Now, and this is why, and that takes me to the second point, it's about mutual legal assistance. You could have the law. We have a law in place in Mauritius for that. We have equivalent, models of that law, because these are based on model laws like those drafted by the UNODC or the Commonwealth Secretariat, for example, so that we are all at the same page. Now, these MLATs have become also very important because one of the ways to tackle risk is to have exchange of information, which your law would allow, otherwise, of course, you'll run into trouble. But you can have that either bilaterally. Mauritius has a bilateral agreement with a number of countries for exchange of information in criminal matters, also for tax evasion with India, with China. We have extradition treaties. This is also something entirely important whenever you have movement of people. One of the most important things recently, I was watching, and this is about drug trafficking. I don't know whether anyone has watched this recent movie called Loving Pablo. It's an amazing movie. It just shows you how Pablo Escobar, who went to Parliament because he became an MP, he tried to block an extradition treaty between the US and Colombia. And that is why the proper legislation has to be there, the proper MOUs got to be there, but what is more important is the implementation. Now, well, in Mauritius, we have had a number of cases where extradition treaties have been proved useful. Last year, with the NCA of the UK, we had a multilateral cooperation involving 3-4 countries to get arrested a kingpin or a warlord at a certain point in time, which required coordinated action between different FIUs, the police, in different countries, so that the arrest is done at a particular time where the accused party was in some other time zone. And of course, you had to freeze assets. You had to make sure that money doesn't sort of, move illicitly. But at the end of the day, get the person. And Mauritius managed to do that.
He has just been. He's been sentenced to 32 years.
And Guillaume is reminding me that this person was sentenced to 32 years by a UK court. So that is about cooperation and collaboration between authorities. Now, the last point I'd like to touch on, I got only 2 minutes for that, is the CDD requirements for non-financial sector people. Vikram has gone into the details of why this is different from KYC. But I think one important issue there, and from what I picked up from the recent ISAMLAG report, is the non-financial sector has, when it comes to, well, CDD, when it comes to preventive measures and so on, has gone into a state of torpor in this country. And I think they have to wake up and rise to the expectations. Well, I don't know how many attorneys are in this room, how many lawyers are in this room, accountants surely, but when I see the absence of reaction from either the MIPA or the Law Society, the Bar Council, because these are regulators. If one takes the care to look at the schedule of the FIAMLA, the Financial Intelligence Anti-Money Laundering Act, well, the law imposes now certain obligations on these regulatory bodies. And I think it is high time for this to take place and implementation to happen. And I think the FIU has worked with the Law Society, ICAC has worked with the Law Society to try to do something about this. But it is high time that we actually take the bull by the horns so that we are up to scratch when it comes to CDD requirements for non-financial sector people, the professionals there. Thank you for your attention.
Thank you very much, Rajesh, for this short insight into some of the important issues, especially coordination. I now have the pleasure to invite the final speaker, Mr. Prakash Sivasankar, who's going to be talking about AML 50 from the non-banking financial services. regulatory perspective. And I already have the list of questions. There are 7 of them. And please go ahead.
Thank you, Chair. Being the last speaker, so I'll try to be brief, but very insightful for all the audience here. So I think we talk about implementation, execution. We talk about national risk assessment, risk-based approach to MLCFT. So I hope in the very few minutes, I'll give you enough information to say what we are doing at the level of the Commission. First, let me talk about the national risk assessment. This is a national initiative, very critical of importance that it might have for the sector. So a sound and robust analysis and understanding of the ML and TF risk in the country will allow the design of a more effective framework for the sector. Now, when we talk about ML and TF risk, we are talking about emerging threats, vulnerabilities in our system. And this can be only demonstrated through a proper national risk assessment where we can demonstrate our understanding of the risk based on factual evidence. It's not a subjective approach where someone would ask us, what are the risks, and we we just say other sectors. But this exercise would give factual evidence, and based on that, there will be a number of implications for this, on how we supervise AML safety. So at the level of the FSC, we have set up team leaders to administratively support the National Risk Assessment Initiative, and I think we have already issued a questionnaire on 12th of September of this year, and the deadline for submission is end of this month. As you are all aware, the FIAMLA has been amended to provide legal support for the conduct of this assessment, and all information submitted for this exercise would be exclusively used for this assessment. So that means it's not going to be used for supervisory actions. That's one. So second thing that we are doing currently is that at the level of FSC, we have brought a number of changes to our law so that to bring the obligations in relations to conducting CDD based on FATF standards. The third thing that we are doing is that we are currently reviewing our code for AML-CFT, and this is where the national risk assessment would be very important because this would provide guidance on risk-based approach to take into consideration the technological developments that new use of technology is doing to the sector. And another thing that we are doing in terms of approach is that we are organizing regional seminars with the help of ISAMLAG in terms of capacity building to ensure that we are compliant with FATF standards. And I want to reassure the industry that FSC is committed to provide capacity building trainings, outreach programs on AML safety to all its licensees to enhance their internal AML safety controls. And also, what we are doing at the level of Commission is to enlist the assistance of a consultant to enhance its supervisory oversight of its licenses on AML safety matters in line with recommendations to meet international best practices. And accordingly, we are bringing the changes to our codes and framework. And as mentioned earlier, the licensees needs to abide to a minimum standards, and this would also apply to AML safety. Finally, what this would all entail is that a thematic review on AML CFTs for our licensees and more on-site visits at your premises. Thank you.
Thank you very much. So this concludes the first part of this exercise, and we have had very interesting intervention on a number of issues that touch that are related to MLCFT, national risk assessment, technology-based solution, peer review mutual evaluation, CDD, centralized KYC, international cooperation, domestic cooperation. There are not 1,000 issues that relate to AML-CFT. There are only a handful. And I think it's not a really huge task to try and work on them and get to understand them better and work to apply them better in your system. I now have a list of questions, and I'm going to ask with the first one. and any panelist can pick up on the question and answer. If they don't, I will impose. First one is, the country is currently undergoing an assessment of MLTF risk. What are the expected outcome of the exercise? Yes, Guillaume?
Oh, well, thank you. I think, yeah, it's appropriate that I answer this question since I talked about national risk assessment earlier. Well, when I hear a question like this, the first thing I have to say is, what people need to do is change the paradigm. It's a paradigm shift that we need. If you ask me what is the expected outcome of the national risk assessment exercise, the outcome is a national risk assessment report. That's essentially what it is. I know what the person asking this question is thinking is, do you expect it to be good? Do you expect it to be bad, or things of the sort? Doesn't happen with risk assessments. The risk assessment will tell you the risk of particular products in relation to particular threats, particular offenses, and that's what it is. And it is being used by practitioners and by persons to gear their own compliance system. That's it. So it is a very interesting report for practitioners. For the common man in the street, it's the most boring thing ever. They will not be able to make it through the first 10 pages. If you want to see what a risk assessment report looks like, many countries have published theirs, so just look it up on the internet. Switzerland has published its risk assessment report, other countries have. So just look at it what it is and you'll understand what the outcome is. It's actually not that interesting in the end, but it's very useful. It's a very useful tool. Yeah.
Thank you, Guillaume. I just want to add one or two, ideas on this. The national risk assessment exercise forms part of the bigger exercise of how we are going to address, or Mauritius is going to address, the recommendations that have been made in the mutual evaluation report conducted by the SMLAG in respect of the level of compliance of Mauritius with the FATF international standards. So now we are in the second phase. We have completed the first phase, which ended up last month with the MER, the Mutual Evaluation Report, which has been published, I think, and now we are entering the second phase. In other words, within the system and its processes, we are now called upon to start developing a plan of action to address all these recommendations. The National Risk Assessment is one major component of that plan of action. That process is going to unfold within the next few months, and at the same time, depending on the level of progress that is being made, we have to submit regular progress report at the SMLAG plenary session. We are way ahead on this exercise because, first of all, without having waited for the report to be finalized, its publication recently, government already embarked on a series of amendments in the Finance Act to address some of those recommendations. But now we are in the second phase of trying to really develop a very concrete and progressive plan of action which will integrate the NRA and integrate all other components that will form the complete picture of how we are addressing recommendation and eventually reinforce the Mauritius AML system and its level of compliance. And I can tell you that there are some changes that have been adopted on the basis of which Mauritius is going to be seeking a re-rating on some of those recommendations. So these are positive steps that have been taken. I just wanted to complement what Guillaume has said. I'm now going to move to the second question. Has any recent digitalization concept, such as electronic know your customer, tokenization of CDD and KYC, been made in the AML strategy? Yes?
Well, I think in my intervention, I said it. It's currently work in progress. We said that with FSC, we've agreed on the minimum standards. We've also changed the legislation. Now I understand that we are going to work closely with Joseph and his team to look at the technology and, of course, which is the best technology for that. And, of course, I guess maybe early next year we should be there.
Thank you. Anybody want to add? Please feel free if you want to add to whatever already been said. If not, I will move to question number 3. Can you provide an update on the central KYC register? And to what extent will it address difficulties being encountered to collect original hard copies of CDD documents? Yes. Do you have a central KYC register?
For the time being, no.
Yes. And anybody wants to pick up on that question? If you want me to repeat, I can do that.
Okay, go ahead.
Can you provide an update on the central KYC register? And to what extent will it address difficulties being encountered to collect original hard copies of CDD documents? My understanding of the question is that you have already started, you have embarked on this project, right?
It is not finished.
Yes.
It's not completed yet. We have to wait until it is completed.
Yes. And the second part of the question relates to the challenges of trying to collect original hard copies of CDD documents. Is that?
We can both do that. Yeah. Well, no. So I think that I don't think it's so much of a challenge. I think the question is, what is the standard or a format by which you all agree to, or all being a set of participants in some sort of a system, agree to a procedure by which you all take information in and then therefore enable a sharing over of that information. And so I think the interesting thing is that a lot of institutions, we've done a lot of work in a country called Bermuda and working on a system that enables their institutions today, that being their telecommunications providers, utility providers, and their financial institutions, to effectively all create a standard by which you share that information, right? And so the question is how you format the data that they currently or existingly have, and then new information has to be basically rendered or shared in that same way. But I think that there's a lot of existing technologies that enable that to happen, across the board. So I don't think it's so much of a challenge.
Pretty sure that there's a few large countries that already have information sharing between the tax authorities and public utilities, and sometimes even it trickles down into the banking sector. I know that France uses some similar technology like this right now. The big challenges are when you're dealing with entities outside of your sovereignty, other countries. That information sharing doesn't sometimes even pass the privacy laws of the European Union, for example. So you may have to come up with more creative ways. And one of the things that we've been thinking a lot about is, what is the end user, the consumer, for example, attempting to do, when they have best behaviors. For example, someone wants to take out a loan in a country that they are perfectly and legally allowed to take out a loan, but they don't have a financial relationship in that country. But maybe they have a great track record of having lent money in another country, and those countries have a great relationship with each other. Should it be expensive and costly for this financial institution to figure out if this consumer or potential customer is a good risk? It shouldn't be, because these relationships of trust exist, and you should be able to verify not just that the trust is there, but the credibility and the history of that credibility exists. And if you could do that while preserving the privacy of the individual in a way that all the parties can agree meets a standard like Joseph was talking about, then you have a stronger network effect, which could then grow to a more beneficial end result for people in these cross-border scenarios. So it's not only about trying to deal with the negative impacts of what could happen if things go wrong, but it's also about the positive benefits when things go right. And I think this is where we see technology opening up new opportunities, new doors, and
Yeah, that's good. Thank you. Yes.
I think in the current model we are developing, we said that the banks are going to put the information there. And of course, they would have already verified that the information in their possession would be mostly, most probably copies of originals. Mm-hmm. And on the second phase of the project, In fact, we're going to try to connect to what's called the information highway that the Ministry of Technology and Innovation is currently currently developing. And that information highway would be essentially to verify any information, because that will connect with public sector databases, including register of companies, civil status division, you know, where you have all the originals will be there. Yeah. So that will come at a second stage.
Thank you. Thank you very much. Next question. How will Mauritius take into account the rapid evolution of fintech in reviewing its AML CFT framework, especially given that it is aspiring to become the fintech hub in Africa?
Fintech specialist.
Any volunteer?
Yes. Well,
Yes.
One of the aspects, going back to the first question, one of the aspects of the national risk assessment is doing constant reviews. So whenever something new comes up, you do a review of the risk. And the risk assessment itself, once we complete it, what we're supposed to be doing with it is make recommendations for policy changes. So I think this is where it happens. Is as new technology comes, as new products are invented, as all these new things happen, we continue the risk assessment, we reassess, and we look at how it will have an impact on the AML CFT framework, and then we make proposals for changes. This is the system that is supposed to happen, how it's supposed to work.
If I may add, I think this is where, as Guillaume rightly mentioned, is that the national risk assessment would look at emerging threats and vulnerabilities. So if technology is bringing more threat, then there needs to be more control. Yeah. But also the other side of having a very factual, evidence-based NRA is that it gives a basis for considering whether any supervised activities might be exempted from some ML requirements if in strict, limited, and justified circumstances where there is a proven low risk for ML. So the exercise helps to determine whether fintech is properly addressed. And this is why I said our code would reflect based on whatever would be the outcome of the NRA.
Thank you. Yes.
As I was telling, the fintech and related areas are also attracting the attention of the International Monetary Fund at a very high level. In the October meetings in Bali, there is going to be a lot of presentations on fintech and its impact and its role in different aspects. The fund also is planning to have a conference or a seminar in sub-Saharan Africa, you know, probably before the end of the year, covering the fintech and its implications, the risk and the issues. So probably we will come to know of it, you know, quite fast.
Thank you. Yes.
In the central bank, we have set up since some time a fintech committee and a blockchain committee. And we recently had a case study on blockchain. Someone did a presentation. It's, again, really work in progress at this stage. But we have not applied fintech to AML CFT, but we are looking into the possibilities of developing our own fintech and blockchain, really to understand what it is all about.
Mm-hmm. Thank you. Next question. With regard to AML CFT for DNFBPs, in particular the legal profession, what are your views on reconciliation of the doctrine of legal privilege and the requirement to report a suspicious transaction?
Never-ending debate.
Yes.
Yeah, well, I'm happy to this question there, which I wanted to touch on earlier. Well, I think one thing we have to let it sink is like what I mentioned for sovereignty. It is no longer an absolute thing. Now, the whole concept of legal professional privilege stems from the fact that when you are in a client-lawyer relationship, or you're in a relationship of where a doctor or patient, or the one who goes to confess to the priest, all these concepts come from one thing: confidentiality. And it has its origins in the way people used to confess to the priest. And it has spread to other professionals, including doctors and lawyers. Now, that is something which goes down to, you know, the ages when you had a conclave. Everything is secret, banking secrecy. Now, is this the order of the day? Now, we have heard today across this panel the move towards transparency by whatever form. And technology is making it even faster in terms of its process. Now, let me tell you that the whole concept of legal professional privilege is again something which is not absolute. And of course, there are inroads in that concept. And one of the major inroads is when it comes to AML safety issues. Now, for example, well, way down 10 years ago, there were certain amendments which were made in the UK concerning tax avoidance provisions of the law, where a lawyer who is advising a client and the client comes with a prepared document from an accountant of, you know, how to do a particular tax planning, which is clearly an avoidance scheme. Now, the lawyer has, under that provision which already exists, which has been there for the last 10 years now, or 12 years, called DOTAS, which is Disclosure of Tax Avoidance Schemes. And that lawyer has an obligation to disclose that to the HMRC.
Yeah.
So, what do you do with your legal professional privilege? If that lawyer fails to disclose that scheme under DOTAS, he runs the risk of being, well, regulatorily dealt with by his professional body, and second, be taken to task criminally by the authorities. So I think when I read in the Samlag report what were certain overreactions of the legal profession, well, I would humbly beg to disagree with, you know, raising this flag of legal professional privilege time and again when it comes to AML CFT issues. I hope I've been clear on
Thank you.
that.
Yes, Guillaume?
Just on the issue of the legal profession, people tend to think about this in the Mauritian context. I'd just like to remind everybody that in the Panama Papers leak, the leak came from Mossack Fonseca, which is a law firm. So there is a problem there that has to be addressed. We have to find ways to make it compatible. Yeah.
I think this is an issue that has really given rise to a lot of debate and have even ended up before the highest court of many countries. For example, there have been two very important cases where, in Canada, for example, it went up to the highest court of appeal, and the lawyers were putting up a fight as to whether it should really, you know, meet that obligation, and in the European Court of Justice as well. But I think, you know, at the end of the day, after some time, the balance between public interest as opposed to private interest, you know, was, you know, in the debate. And it's an interesting issue. It's important because, you know, recently there's been an amendment where lawyers are now called upon to provide the relevant information for purposes of the national risk assessment. Yes. But this is an issue, I think, it's a very interesting question that, you know, needs to be addressed. The next question, what are the measures, I think it's been partially answered. What are the measures that have been put in place to ensure that centralized database registry are as robust as those performed in face-to-face clients onboarding? Any volunteer? Yeah.
Was that a cybersecurity question?
What are the measures that have been put in place to ensure that centralized database registry are as robust are those performed in face-to-face clients onboarding?
With regards to onboarding?
Yeah. I think that the
I mean, I can take a go at this question. You know, anytime a financial institution is, you know, keeping record of user data, or let's just say their customers, that's looked at like a centralized database. You know, the idea of decentralization is sometimes, you know, used in many different contexts, so it can mean many different things. One of the reasons that we talk about it, about these decentralized networks, and I'll tie this together in a minute, is because there's this question of who's in actual control of the data, if it's inside of a centralized database, or what happens if that database is somehow breached by some unwanted third parties. So, you know, one of the benefits of having these ledgers that anybody could have a copy of, or have the ability to at least verify the consistency of independently of the, say, centralized authority that had initially set that database up and said, here's our data, is that we then have trust transferred around in a more distributed way rather than trust being completely centralized in one location. I think when we talk about the idea of having these centralized KYC registries, we're not necessarily meaning that there's just one database in some server room somewhere that stores everybody's identity data. This is very unlikely to be something that would scale in actual practicality. What we would instead likely see, and I think we already have this, except these networks don't communicate very efficiently and they're not well standardized, is you have many different institutions who have already established customer relationships and counterparty relationships. And they need to be able to have a way to communicate the trust and credibility of those relationships between each other. So what we're really talking about is a network. And sometimes we use that term of a centralized database for all of this KYC, but in the end of the day, it's actually a network because we're communicating between many different parties.
Yeah, I think to look at it is, imagine you had many different micro-centralized databases that all speak to one another, right? So you're actually using the distribution of multiple parties, as Ben's referring to centralize all of the data, but the actual way in which it is stored is in a distributed fashion. So you're gaining the benefit of all of us being able to go to one place, kind of like Google, to search and actually find certain information, as we do on Google today and the internet. Only the difference is that we're actually securing that and storing that in silos, thereby actually making it more secure than as if we were to actually secure all of our information for identity purposes in one place. And looking at many other use cases of hacking and breaches over the last few years, you know, you probably don't want to keep all of your information and identity information stored in one place. So.
Yeah, we end up with this open, intelligent model, and at the same time, we don't necessarily want our personal information being transmitted across public networks in plain sight. We all, like, the idea is not that people's privacy should be exposed. The idea is that we're able to establish trust, and we're able to then offer services because of that trust that we were able to establish much more efficiently and at a lower cost, and in a way that we can independently verify. A lot like if you're no longer needing a translator to understand the context and semantics of another person's language. You can just communicate freely between each other, even if you come from different backgrounds and different cultures. This is the same idea we're embodying in technology.
Thank you. Yes.
I feel that to make it very simple, any type of centralized database in the financial sector, you know, to make it very robust, it should have 4 or 5 characteristics, and it applies for this also. One is the data integrity, the validity, the reliability, the scalability, that tomorrow FATF comes with something, your data, you know, your CDD data should be capable of doing that without too much of a, you know, redoing the entire thing. And the next one is capability to generate MIS without manual intervention. That is the most important thing. You have this database, you want something from this database, you take it, put it in an Excel sheet, somebody does that, then there is no use for your database. So it should generate the MIS that you require from this without manual intervention on a seamless way to the best of capabilities. And finally, it should also help you to slightly deviate from whatever you are doing, based on any environmental changes that can come, apart from the scalability at the present level itself, to tweak it a little bit here and there without having any validity or integrity problems. If that can be achieved, then all robustness and other things come automatically to your central database.
I think the design of the blockchain platform is based for that particular purpose to ensure trust on the basis that there cannot be any tampering with any of the data in the system.
Yeah.
Correct?
Yeah. So it's not that you could attempt to tamper with data. So it's not that I couldn't say I'm going to attempt to falsify that my name, even though my name is Joseph, it's John. But the question is everyone here in this room, you all know, if you look on the agenda, that my name is Joseph, right? And this is what and if I were to ask all of you if my name was John, the response to the room would be, no, your name is Joseph, right? And it's because I'm asking everyone here as a participant in the network to validate the validity of the information in front of you, right? And so the question isn't whether I could try to attempt to fake it. The question is would everyone here involved in that system agree that I am in fact John when in fact I'm not, right? So the idea is that it's not that we can't try to, but the question is it real or not? The truth is in front of you as opposed to only being in front of myself and for me being able to do things without anyone else seeing it.
Yeah. Thanks, Joseph.
Yeah, I'll add one aspect to that that's very interesting about these blockchains is that they enable incentivization mechanics that were never before possible in multi-party systems. And so it's not only that, in Joseph's example, that everyone would agree, but that it would be very expensive and costly for Joseph to convince everyone otherwise.
That's a really good point.
And that cost would then outweigh the benefit that he may gain from trying to do so.
Yeah.
That's a good point.
Yeah. Thank you. Next question. We only have 2 left. Do you think we should have a uniform AML CFT framework for financial services sector, or do we need sector-specific AML CFT rules?
I think what we have mentioned is this is, again, going back to NOA. Like, if you look in other countries, this is why they conduct NOA. It's like there's no one-size-fits-all. Based on the NOA, you can graduate between different, based on the vulnerabilities, based on the threats, you can really graduate which level of AML CFT you want to impose. But very important is you need to have a minimum standard, which we have been saying. And this is where we have been in discussion with the central bank to come with a minimum standard.
Anybody else?
I think the issue is, if you look at the risk profile of the institutions, the risk profile of the institutions are not alike. An entity supervised by the Bank of Mauritius and an entity supervised by the Fsc, they may be operating in different segments of the financial markets, and accordingly the risks and the risk profile may be different. So, like very rightly pointed out, we cannot have a same type of system which fits everyone. But then there are minimum standards which takes care of what is required from an entity, and plus it can be, and these are minimum standards. So any supervisor can put an upgrade on that and what is expected from the system. And I think that will be the ideal way of designing an AML CFT framework.
Especially in the context of the different level of risk sector-wise.
Yeah.
That I think.
But I think this can only come if both of us have a risk-based approach.
Yeah. Absolutely.
Absolutely.
Thank you. Final question. Well, last but one. Can a sandbox license be used to apply for acceptance of use of digital systems to certified documents in place of original certified true copies on paper, whilst the laws are being changed? Shall I repeat? Yeah. Can a sandbox license be used to apply for acceptance of use of digital systems to certified documents, in between inverted commas, in place of original certified true copies on paper, whilst the laws are being changed? Yes?
I mean, isn't if I'm not mistaken, that a sandbox license would be towards the ability to regulate from a financial, what I do in a daily capacity as some sort of a financial service, as opposed to whether the documents, which would probably be of a privacy nature, I would imagine, whether I'm able to change the way that privacy laws are working or some sort of an information sharing requirement on behalf of a consumer, which probably would not fit under the sandbox licenses. I don't know.
Yeah.
How's that for a try?
Any volunteer?
You know, technically speaking, someone who has a sandbox license is not regulated yet by the regulators. So if they are doing a business, they must have a client, and if the client is outsourcing to them, and so that's just an outsourcing agreement. Otherwise, they are not regulated by the ISA, because it's only temporary in nature.
Thank you. We have exhausted all the questions. I have just if Joseph and Ben would allow me to get a clarification. I understand blockchain. I mean, we've talked about trust and anonymity and security, which is built into the system and which affords really a safer platform. But when you look at one of the criticism, or not necessarily criticism, one of the questions that have been raised with respect to blockchain technology and ledger in the context of, for example, virtual currencies, Bitcoin.
Yep.
The question of anonymity comes up.
Yeah.
And if you look at the Tor, the onion router, for example.
The DAO.
Yes. No, the Tor.
Oh,
Tor.
Yeah.
Yes.
Tor.
Tor.
So the question of anonymity still remains a puzzle.
Yeah.
Yeah.
So I think there's a few misconceptions that are really, really important to address. So, and we actually, there's a lot of research that's been done in our ecosystem, and we actually announced this at the OECD earlier this month. We actually did a study to look at what are first of all, the amount of illicit transactions or illicit activities that occur with Bitcoin in use. The majority of the audience at the OECD, there's hundreds of people, if not thousands, tuning in. I think 20,000 were there. We asked them, we polled them. We said, is it 75% of transactions that are Bitcoin transactions, or have they been used in illicit activities? What the actual research found was it was less than 0.5% of all transactions that have ever been recorded and actually done over the Bitcoin network since 2009 have any ties to illicit transactions. And so that's like one important kind of fact. I think the big misconception too is that Bitcoin is anonymous. Single-handedly, the worst thing to do, and I assume no one in here is doing illicit transactions, but if you are, do not use Bitcoin to do it, because it is highly traceable, trackable. We have the ability to look at every single transaction that has happened across every single token and all the times that they've ever been moved, and likely by some calculation who. It is the worst way of anonymizing anything. And this stems from a really important idea, is that Bitcoin was not meant to be anonymous. And it was meant to enable, at the base layer, an initial form of anonymity up until I decide to make any type of transaction, which is what we call pseudo-anonymity. Right? And so the problem actually that Bitcoin has, the biggest problem, and one of the most important things in money, in creating fiat currencies, is what you call fungibility. The ability to have the integrity of my dollar bill, whether it's been used in a murder or something terrible, the fact that I can take that dollar bill, give it to Ben, and there is no history that is transferred in ownership of that bill is one of the most important tenets of what makes currency. And Bitcoin has a very big fungibility problem in that respect. And so I think that there's a lot of misconceptions around what that is. And I think that that's becoming more and more understood by people today.
Thanks, Joseph. I'm glad you clarified this point, because the very rationale of blockchain technology is to try to de-anonymize the whole thing. But when you go on the Tor and you take a look at it, you get the impression that this market is huge.
Yes.
And it's quite frightening, actually. But anyway.
Yep.
Yeah.
I'll add one point. I mean, blockchains are fairly simple in their basic premise of being able to distribute and transfer data and have a consensus around what that data is amongst multiple parties. I think what we also are seeing is the application of applied cryptography And there are really powerful use cases where that can protect the end user. It can give you great privacy. You could also apply it towards being able to send information that would not be revealed to anybody, right? So one of the powers is selective disclosure, which could be used to enable regulators, for example, when they need to verify information, but where otherwise it would be completely encrypted on a public network. So I think these are tools. We have to be responsible with them.
Yeah, that's a really good point. Lastly, just if you think about it, the cash in your pocket is actually decentralized. Think about it that way. And it's highly anonymous. It's cash, it's bills. All right, done.
Thank you for having us, sir.
Let me thank all the panelists. We've had a very interesting discussion and a good combination of all the issues, including technology as a perspective. And I will hand over to the master of ceremony. And please, let's have a big round of applause for them. Thank you.
Well, thank you, dear panelists, for this in-depth expose on the AML framework from a variety of angles. So a round of applause to you, and a round of applause to everyone present here. Dear panelists, can we have a souvenir photo, please? Thank you very much, gentlemen. Thank you. Please regain your seats. Thank you very much. Last but not least, I now have the pleasure to invite Mr. Avesh Segulam, Chief Executive of FSC, on stage. Before he proceeds with a vote of thanks, he would like to remit a token to the Chairman of the FSC, Dr. Ranganathan Padayachi. Avesh, the floor is yours.
I think it's been 2 days of very insightful and enriching discussions. And after these 2 days of very long and insightful discussions, I will certainly not want to make a very lengthy vote of thanks. And certainly, if I was in your place, I would not have listen to a very lengthy vote of thanks neither. But I have to, nevertheless, thank each and every one of you for having made this 2 days conference a success. I think since yesterday we've been addressing key topics of high importance to the future of the role of Mauritius as an IFC. And certainly, you know, the very theme that we had chosen, Mauritius IFC, forward-looking, in itself, I think, has been discussed lengthily. Key takeaways certainly will be, you know, put together into a report and circulated to all the members of the industry and relevant stakeholders. I'm not going to go into the details of those takeaways, but I think it can be beautifully summarized within the 3 letters IFC. Focus has to be on international meaning international adherence to best practices, international meaning, you know, meeting expectations that we have to meet as regulators vis-à-vis our counterparts internationally. as well as ensuring international equivalence across the various segments of activities where we operate. The F being certainly for financial soundness, financial regulation, and certainly fiscality related with that. We have to be forward-looking, and while we maintain a very fine line of balance between competition, competitiveness of our jurisdiction, and compliance that is needed. And certainly the C is for clarity and certainty that we've been really discussing about since yesterday. And I can assure each and every one of you here that the very purpose of this conference was to shed more light on what is happening in terms of the latest developments impacting our financial services center. A number of commitments, a number of announcements has been made since yesterday. I will not repeat them, but I can tell you that the next 2 weeks is going to be very strategic for us. Many things have already been finalized. Many things have already been announced since yesterday. But whatever is pending will be finalized in a very collaborative manner together with the industry in a way that it works for the future of Mauritius as an IFC. There have been debates. I've been reading a number of comments in the press, a number of comments on the social media as well, that most probably, the decision that have been taken by, the policymakers are not directly related to the future that we want to put in place for the Mauritius IFC. I would strongly disagree with that, because I think it's all, all the discussions we've been having since yesterday point towards a convergence of what we want to achieve and in terms of where we are going at a policy level. Certainly with these words, I would like to thank each and every one of you. I have to, in the very first place, thank the Honorable Prime Minister for having believed in the sector and continuing to believe in this very crucial sector of our economy. Big thank you to the Minister as well, the Minister of Financial Services and Good Governance, who has been very supportive of whatever we've been doing so far. Big thank you to our two lords who have joined us from the UK, Your Lordship, Lord Meghnad Desai, who is still with us here today, and Lord Anthony St. John, who had other commitments today in London, so he had to fly out of Mauritius yesterday. The board members of the FSC, and certainly the chairman of the FSC for having believed in the team to have made this a reality. And each and every speaker and moderator, because without your insightful contribution, this would not have happened. So a big thank you to each and every one of you. We started working on this conference exactly a month ago. Many people were doubtful of whether we'll be able to put it up or not, but I think it has turned out to be a beautiful conference. And I look forward to working closer now with the industry in finding more solutions-driven answers to the future of Mauritius as a financial center. Lastly, but certainly not the least, I have to thank each and every one of my staff or my team members, without whose support, basically, this would not have happened. I know, guys, the last 1 month has been very demanding in terms of delivery. Unfortunately, the bad news is that the work does not stop here. It actually starts from here. So expectations are growing, and we have to deliver, and we will always deliver as a young and dynamic team. Thank you once again for your attention. Thank you.
Thank you, Mr. Segulam, for setting the way forward for the future of the Mauritius IFC. On this note, ladies and gentlemen, we thank all distinguished speakers and participants for the fruitful deliberations on new avenues of development for our financial services sector. This conference is now officially closed, and we will close it with a group photo of all the employees from the FSC as a souvenir photo. Please come on stage. Thank you very much, and have a good afternoon.